Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. Traders, we're going to go to work today on Boeing. It's been one of the strongest performing stocks this year, and it looks like the uptrend should continue. So let's start off here on the daily chart, and you can see we have a very, very powerful uptrend going on here. We have a series of gaps from the last earnings report, which this gap looks to have been filled with this consolidation, but this gap is left open, and that's what you call a continuation gap, and generally that's a bullish signal. So right now, heading into the next earnings report, which is October 31st, we have a little bit of a consolidation, which it looks like it's set to break higher. And in a minute, we're going to go over to the intraday chart and kind of zoom in. But first, let's just take a look at that level of implied volatility. We're starting to get some escalation there, heading into the earnings in a couple weeks. Also, there's a lot of news right now in Boeing adding to that higher implied volatility. So when there's higher implied volatility, generally we look at that as overbought. And volatility is mean reverting, meaning when it gets too expensive, it will eventually come down, and that will depress the prices of both puts and calls alike. So if we want to express a bullish bias with the outlook that implied volatility might be moving to the upper end of the range, it's better to be selling those expensive puts to be bullish rather than buying those expensive calls. So let's get off the daily and kind of get a better view here. Let's go down to a 195-minute chart. And as we look at the 195 chart, you've got a bit of consolidation here. And it looks like if this uptrend is to continue, we should be able to pierce and break out of that consolidation. So what I'd like to do is go ahead and sell some expensive puts right around the $255 mark. And I'm going to put a stop just below the 250, and the stop is going to be the purchase of a lower put. So selling to 255, buying the 250, expecting that this lower end of the range won't be tested anymore as we begin to move up through the 260 mark. So let's go ahead over to the options execution platform. Here's the trade I've loaded up for you guys. We're doing the October 27th. These weeklies expire in 25 days from this recording. Selling the 255 put, buying the 250. A credit of about $1.60 should be taken in depending on when you execute the trade. So that's $160 of potential profit squared up with a max potential loss of $340 if you hold this thing all the way to expiration. But let's go ahead before we execute the trade. I'm just going to say if we trade back below $152, kind of towards the lower end of that range, let's close out of the trade, and we won't likely face a max $340 loss. Okay, so using a 152 stop in the underlying stock. So let's go ahead, put the trade to work, and filled. So that is going to be the trade in Boeing, guys. Be sure to stick to those stops. We are traders who contain a risk in the trading nation. We're not just putting it on and praying that the trade works. We always have an out if the trade does not work. If not, we're going to be looking for the upside. Take us through 260 in Boeing. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade. Be sure to follow us at Trading Nation on Twitter. For updates to this position as well as all the other trades our traders are watching, and we'll see you guys on the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.